Welcome to Going Forward, where inspiring conversations with leaders and entrepreneurs shape tomorrow. Dive into the depths of their journeys, the hurdles they've overcome, and the insights they bring to the future. Let's get moving right here, right now on Going Forward.
Going Forward Nation, it is your host, Eric Elliott. I'm a little nervous, man. I got someone on the line. I don't fan out on people pretty often. And I got someone on the line today. His name is Mr. Brian Feroldi. I want to introduce him, but I want to set this guy up the right way. I've been following Brian for a while online. And, I remember reaching out and kind of telling you, Brian, I got to get these people. I got to get them to know exactly who you are. And I started falling in love with the content that Brian has about the financials, the stock market, how to invest. And I think now is a more critical time than ever to talk about, financials and everything. And so I'll tell you guys a little bit about my guest, Brian. He's been analyzing businesses and analyzing stocks for a couple of decades. I'm not dating the man. Once you see his face, you'll see he looks like he's 15 years old or something, man. Also, we're going to discuss how to read financial statements, how to value companies. I want to talk into that, and also long-term investing strategies. And to tell you a little bit about Brian, he's a financial educator. He's got a great YouTube channel with a lot of subscribers. He's an author. He's been intensely interested in money and personal finance and investing ever since he graduated from college. Ladies and gentlemen, welcome, Going Forward Nation, Mr. Brian Feroldi. Brian, how are you doing, man?
I'm doing great, Eric. Thank you for the warm introduction. And viewing myself as a 15-year-old, I think people would disagree if they saw my hairline.
That's all right, man. I got a little gray going on, Brian. It's all good, man.
I wish I had gray. I just got nothing.
Brian, man, it's so good to have you, on and talk about financials. It's the one part about business that people hate talking about. They love talking about the doing and everything else and all this hustle stuff, but you'd be surprised how many people just don't know or understand their financials, right? And I remember, Marcus Lemonis said something. He was like, if you don't know your numbers, you don't know your business. You believe that to be true, Brian?
Oh, 100%. I mean, I learned this firsthand. So I worked for a startup right out of college. And, we were a fast growing company. That company's gone on to be phenomenally successful. But because we were a small startup, I got to know members of the C-suite extremely well. Yeah. And it didn't take me long to realize these people were incredibly smart at sales or marketing or engineering, but very few of them could actually find, read, and interpret financial statements. When I came forward as, again, a fresh graduate that was studying this stuff on my own, they would ask me questions about revenue versus margin versus profit, and how can we be losing money, and what's the balance sheet? So basic questions that I saw firsthand people in the C-suite did not know. So it's no surprise to me at all that people that are just new to business or even been in business for a long time don't know how to read the numbers.
Well, how could that be though? Or they just, if they're not paying attention to the numbers or the bottom line, then what are they paying attention to? Just the overall sales? Is that what it is?
Yeah, I think that people that get into a business or they become entrepreneurs, they do so because they love something. They're really good at something. I have a friend that owns a dance studio. She got into that because she loves dance, right? Yeah. That was what she's passionate about, and she knows that cold. But it's an entirely different thing to know dance and know how to do the thing and then run a business. That's an entirely different skill set. You need to learn marketing, you need to learn sales, you need to learn financial management, you need to think about cash flow and the balance sheet. And for many people, that's not something that they know or intuitively think about. So a lot of people are really in love with the idea of their business, but the numbers are kind of like a task that they just have to do.
No, Brian, you started doing it when you came out of college, but I mean, it takes a special person to say, I want to learn numbers or just dive into numbers. And like you said, you had some C-suite people that really didn't understand a lot of things like margin and profit. How did you dive into the numbers? What made you fall in love with numbers, man?
Yep. So it really started with myself. So when I graduated from college, this was 2004, I graduated with a degree in business, yet I would effectively consider myself to be financially illiterate at the time. Yes, I could take tests and pass them. And I even took Introduction to Accounting in college, but I'd consider that education to be just to the left of useless, because it's not like I learned how to read and analyze the numbers in a way that could help me make a decision. So the way that I learned about financial statements was backwards. So the reason that I wanted to make myself wealthy, I was interested in growing my personal wealth, and as I learned how to do that, I discovered that, well, you had to become an investor to grow your wealth over the long time. I studied a couple different investing styles. There's real estate investing, there's small business investing, there's stock investing. For me, I discovered that stock investing was the best fit for my personality. It was the asset class that I liked best. And if you want to become a stock investor or a business investor, it's absolutely crucial that you learn how to read and analyze financial statements. Otherwise, you cannot make intelligent investing decisions. So the reason that I became so interested in studying financial statement analysis is because I wanted to learn how to become a better investor. And to me, there's no better way to learn something than to become passionate about the subject. So the reason that I know financial statements cold today is because I've been intensely interested in growing my net worth. And this is just education that I had to develop along the way.
Yeah, you said about making these decisions, and a lot of times some business owners, they make gut decisions. And I remember hearing a guy named Martin Babinick. I was at an event, and Martin Babinick said, he said, if you're going to make gut decisions, you need to feed your gut. So, I mean, what kind of things should they be feeding their gut with if they're going to make an important financial decisions?
Well, I guess it depends on the nature of the decision that they're making, right? If it's about to go after a certain market opportunity or to invest in marketing and sales behind a certain channel, sure, you can use your gut to make those. But if you're going to be making high-level decisions about, should I buy a business? Should I hire somebody else? Should I go after this market opportunity? Using your gut to make decisions it can work, but to me, that's like throwing darts and not being able to see the target you're aiming at. To me, it's so much more useful to be able to do analysis ahead of time, to find numbers and really run the numbers and crunch them to say, does this make sense? If I was a real estate investor, for example, I could have a gut feel about this market's going to get hot. Right. And I might get lucky and that, yes, the market did get hot, but buying a property without doing due diligence on the numbers would be foolish. That would be essentially gambling that my gut feel was right. If you're going to be making investments in real estate, you want to make sure that the house that you're buying or the property you're buying, the numbers make sense, whether or not the market gets hot or not. So to me, using your gut is more akin to gambling, and using analysis and using numbers is much closer to investing.
You mentioned 3 different ways to invest. You talked about small business investing. You talked about stocks. You talked about real estate. And I'll lead off with what you just talked about with stocks. I mean, so and I want to tell our guests and our listeners as well too, like, Brian's not giving you financial advice. He's talking about his expertise and his opinion here. So I don't want you guys to say, well, Brian told me to do this. You know what I mean? So like, if you're looking into, like, let's just say stocks. I mean, what are you looking for, Brian? If you're looking into a stock, and I think the first thing that people have to say is like, well, because you get emotional behind investing. What are some of the things that you tell them to prepare for before they start investing in?
Yeah. So when it comes to analyzing a stock, there is a whole bunch of things that I like to look at before I would ever pluck down dollars to buy a stock. And the reason that I have developed the system I have today is because when I first started, I had no system. The only thing I knew how to do was look at the price of a stock. End of due diligence, right? That's the only thing I knew. I couldn't tell you how to find financial statements. I couldn't tell you how to read SEC filings. I couldn't even tell you how to interpret that, even if I had that data. So the reason that I have the system that I have today is because I made a series of dumb decisions that cost me money. And I slowly spent time studying investors that do it well. The Warren Buffetts of the world, the Peter Lynch's of the world, the David Gardners of the world. So now I have, over the last 20 years, developed a checklist that I use whenever I'm going to be analyzing a business. So if somebody comes to me or if I come across a stock idea, what I do is I take that company and I take it through my checklist step by step. And what my checklist allows me to do is to make sure I don't overlook something that I have said in the past is important. So my checklist has like about 35 different steps and check marks to it. Many of them can be looked up fairly quickly, but on there are things like, what's the direction of the company's revenue? Is the company's revenue high quality, meaning it's recurring in nature and it has high margin, or is it low quality, meaning it's a one-time purchase and it disappears when times go bad? Who's running the company? How much stock does that person own? How long have they been at the company? What do their employees think of the manager of that company? Right?
Wow.
What has the stock done since it came public? Has it outperformed the market or underperformed the market? What do I think is the company's competitive advantage? How long will that competitive advantage last? Does the company have favorable or unfavorable growth prospects? So these are just a sampling of some of the things that are on my checklist. And my checklist takes me about 60 minutes to 90 minutes to go through if I don't know the company at all. But the reason I'm such a big fan of checklists is by the end of the process, I've made sure that I've checked all of the things off on my list that I have said in the past are important to me, and it makes sure I don't overlook anything throughout my process. So after I take a company through my checklist, I have a very good idea of, is this investment a fit for my investing personality? And from there, I can make an intelligent decision about whether I should buy it or not.
Now, some of us, me included, you started talking about just looking at it and purchasing. And I was like, I'm that guy. You saw me pointing at myself. But then, some of us, like, we don't have like that knowledge. Like you're saying, like, build a checklist. The closest that some people get into trading is their 401k when they get to move the investments. You know what I mean? I mean, what else should they be looking for? Those who are not us laymen's when it comes to investing, right?
Yeah. So there's a spectrum of investors. So I myself consider myself to be in the 1% of investors that really likes to study investments. I'm willing to look at SEC filings, to read conference calls, to look at press releases. I'm willing to do that level of diligence and research because my investing style is to buy individual companies. Now, in my experience, 99% of investors have no interest in doing any of that. They just want to make a smart financial decision once and really never think about it again. So they just want to contribute to their 401k and they just want to know, what fund do I buy so I never have to think about investing again? That is perfectly acceptable if that's the type of investor that you are. But if that is the type of investor you are, I still think you need a basic level of financial education to understand what the stock market is, how the stock market works, and why investing in the stock market is a good decision for your capital long-term. Because so many people put money into a 401k or something because they're simply told it's a good idea to do so. Or historically, the market has gone up, but that's the end of their education level. And that doesn't work when the stock market goes down, because if you don't know why the stock market went up in the first place, it's like building a tower on no foundation at all, right? It's so easy for your confidence in your investing strategy to collapse when things are going bad because you don't have the basic understanding of what the stock market is in the first place. So to me, the first step, even if you want to just keep investing extremely simple, is to just educate yourself about the basics of how the market works.
True. That totally true. And I do think like, the 401ks, I mean, I do think like some people are confused by it, but like some folks, I guess, whenever they are in a 401k, there's only certain investments that you could do, right? Or, I mean, how do they, move or do the right thing when they're limited in what funds that they can actually opt into or invest in?
So this would be the level of education that you need in order to make smart decisions. You're absolutely correct that the investment choices that you have in a 401k are limited by what your employer and the employer's plan choose to put into the 401k. Some 401ks have fantastic options. Others have terrible choices. And those choices are often very limited and can often be very high fees. And even in more cases, the consumers that are buying, that are putting money into their 401k, have no idea that they're even paying fees, which is just like almost criminal in their nature. So this is the basic level of education that I'm talking about. You need to know what you're buying. You need to know how much it costs to buying, and you need to know at least the basics about the difference between a mutual fund and an index fund. As a general statement, and boy, is this general.
Wow.
My vast preference is to put money into broad-based index funds, such as the S&P 500 or total stock market index fund. Keep your costs as low as possible. And if you have those choices in your 401k, that's the right choice for most people.
Got it. Man, you talked about the consumers. You brought up the point about consumers as well. And back in 2020, 2021, when people were investing in stocks, a lot of consumers, they ran to things like Robinhood and they started buying. And you probably heard this 1,000 times. I bet every one of your friends were calling you about GameStop back then. Can you kind of explain like what happened with that entire thing with the whole GameStop, the bubble, how you just went from to a unicorn overnight almost?
So the GameStop, what happened with GameStop is an entire podcast in itself. The gist is GameStop was essentially slowly dying retailer. It was a brand that was losing relevance because the company's whole business model was selling physical video game products in store when the video game industry was being digitized. My son, for example, has an Xbox where he doesn't have to buy physical games anymore. They're all downloaded through the internet. So what do you need GameStop for in that world? So because of that pressure, GameStop stock was going down, and GameStop, for whatever reason, caught fire with the Reddit community, all decided to pump money into buying the stock, which caused it to go up. And then there was a whole, meme stock craze about it. So I don't think GameStop is a good thing for people to study, simply because it was such a wild one-off, right?
Yeah.
If you're going to be studying investing, it's much better to study Walmart or Microsoft or Apple, like companies that haven't had a truly crazy history like GameStop has.
Man, yeah, Brian, I could ask you a million questions about the whole GameStop thing, and I love how we're talking about the investment in stocks and everything else. I want us to take a break, come right back, and I want us to talk about those financial statements and also like what you look at when you're talking about buying a business, because there's a lot of entrepreneurs and business owners who are listening to this, right? And this past year, what I've seen happen a whole lot is like we work with a lot of law firms, and you get some law firms, the owners are getting up in age and they're selling it, and I want them to know like what people are looking for, and also for those who are looking to invest, what they should look for when buying a business as well. We're going to take a break and we're going to come right back.
Hold tight, listeners. We're taking a brief pause. Going Forward, we'll be back shortly with more insightful conversations.
Running your law firm is a serious business. When you actually got out of law school, they didn't teach you how to market your business, or they didn't teach you exactly the business of running a law firm. And that's what we do. We want to be able to come in and work with you and your firm so that, one, you can start marketing your firm correctly, coach you on how to get to the next level and where you want to get your law firm. And most importantly, we don't want you to be one of those law firms who are a laughing stock of the community. Don't hire a marketing agency that's going to make you look like a buffoon online or social media and try and make you be something that you are not. It's time for you to start running your firm the right way. Go to VIPmarketing.com.
Welcome back to Going Forward. We hope you're recharged because we've got an exciting second half waiting for you. Get ready to dive deeper and be inspired. Let's keep the momentum going.
Going Forward Nation, I have my guest, Mr. Brian Feroldi, and he's heating up the first half talking about investment. You can kind of see his passion. Dude, you're passionate about this stuff, dude.
I love it, man. I love this kind of stuff. It's actually crazy to me that more people aren't interested in this kind of thing. I mean, this is how you build wealth. This is the knowledge you need to like build wealth. And if you're not interested in building, if making money and building wealth doesn't fire you up, I don't know what will.
Brian, you got over 200,000 people that are following you, man. How often are those people reaching out to you saying, I need help? Or are they embarrassed to say like, I need help?
It depends on the platform where you're on. And to your point, the kind of content that I produce is mostly educational in nature. I do get direct messages every day on every platform with people saying, here's my situation. What do I do? And I do not ever provide personalized financial advice, but I try and point them in the direction so that they can get information about that. But yeah, it's a consequence of having a large audience on social media is I do get bombarded with direct messages.
You mentioned earlier in the first part of our conversation, you were talking about when you're looking at a business, people are looking at like, do they like the managers? Some folks don't know how important the employees are into a business. You got to think about the employees are the one asset that leaves the building every day, and you hope that they come back. So if you're talking about assets for a business, like I had a conversation with Chris Ronzio. He owns a company called Trainual. And he was talking about like the systems and processes, how important they are for a business, especially if that business owner is thinking about selling. And then I heard you just say, like, hey, you're looking to see how the business runs. Do people like the owner? How do the employees feel? Do you look at a business and say, okay, how does this operate? Let me look into how they run this business, its systems, its processes, its people. Do you ever look into that, Brian?
So so when I'm an investor in publicly traded companies, that is the asset class that I own. So because of that, I am limited to the information that I get from public filings.
Okay.
One resource that I do use constantly before I make an investing decision is Glassdoor. Glassdoor is a website you can go to and you can put in the company name and you just get some very basic information about who is the CEO, what do employees think of the company, what do employees say are their downsides to the company. So I look at those. I look at those every time. And as a general statement, it's much more enticing to me to invest in a company that has a CEO that everybody likes working for versus one that nobody likes working for. But at the system level, I do not get into that level of detail, and I'll tell you why. If a system is working, you can see that in the company's financial results. If a system is not working, you can see that in the financial results. The financial results that a company produces are a report card. So if I came to you, if I showed you a report card, if I brought home a report card and that report card had straight A's on it, you would deduce this student's system is working. Maybe they're naturally intelligent. Maybe they have a really good system for studying, but it's working.
Yeah.
Conversely, if I showed you a report card that had C's and D's on it, you would say, this system is not working. Things are broken here. So I don't have to go into the level of the details of how does the business work, because I, as a public investor, I don't have to worry about operating it. I'm buying it and I'm along for the ride. And I just want to know, has the system that the company has produced A's and A pluses so far? If the answer is yes, then I'll move forward. If it's not working, if it's not broken, I just skip over and go on to the next investment idea.
I've seen you, online, you've kind of broken down like the profit and loss statement. You've broken down balance sheets. Can you tell me about the importance of, that profit and loss statement is more than just a report, because like the numbers always tell a story. And especially like what you just said too, if it's doing all A's across the board, you thinking like they've got their stuff together.
Yeah, exactly. To me, the best investments are the one where it's like, this thing that's working, I think it's going to keep working. That's an easy investment thesis for me to get behind. This great company is just going to stay great. A much harder investment thesis is this company is broken, but I think it's going to turn around. You can make a lot of money if that works, but that's a very, very hard thing to do and very hard for me to make money on. So when I'm analyzing a company's profit and loss, also called an income statement, or it's also called an earnings statement, actually has several different names, I'm always analyzing a couple things. What is the direction of the company's revenue, the top line?
Okay.
What happens to the company's revenue when the economy turns south? The best answer is revenue keeps growing or continues to go up. The worst answer is revenue plunges and the company becomes unprofitable when bad times come. But you can be assured as a business owner that bad times will eventually come. So I want to invest in businesses that thrive even when the economy overall is doing pretty poorly.
Mhm.
After I look at revenue, the next number that I pay a lot of attention to is called gross profit. Gross profit is revenue minus the cost of producing the revenue. So the cost of sales. So I'm not sure how this would work with a law firm, but I would
Mhm.
basically consider the cost of sales, all the internal legal costs, the legal expenses that you have to produce that revenue. So this might be, it's likely to be all personnel costs, but that to me is revenue from the case minus the cost to me of the case. That is gross.
Right. Yeah.
And I want to see the direction of that gross profit over time. Because to me, if a company is growing its revenue, which is good, but the company's gross profit is stable or even worse, declining, I'm not interested in buying a business that's growing its revenue, but that revenue isn't producing profits for the owners of the business.
Right.
Make
That's a great point. If you look at like a lot of folks, they'll say like, "Oh, we made the list. We made the Inc. 5000 list." But one of the things, if they read it close, it doesn't mean that those companies are profitable.
right.
Not at all. And a lot of people don't know that. They think, "Oh, we made the Inc. 5000 list 5 years in a row. Fantastic." But it didn't mean that you made money. You
Correct.
know?
Correct. There's an enormous difference between sales and profits.
Yep.
Those two things can be miles apart. And oftentimes they're at odds with each other. You have to purposely sacrifice profits in order to drive more sales because you're chasing different business. Perhaps you have to take on more internal costs to be able to service that business. So
Mhm.
I like to look for businesses that are stable, growing revenues, and they have profits growing alongside with that revenue. And depending
Mm.
on the size of the business and the nature of the business, those two things can move in opposite directions, even during good markets.
Well, how about like the balance statement? I think some people they don't know. They think just the balance statement is the one thing that the bank's going to want to see when you're trying to get a loan. Explain the balance statement and the importance of that balance statement, please.
Yep. So a balance sheet is just a company's net worth on paper. The formula is extremely simple. It's assets equals liabilities plus owner's equity. So, Eric, if I said to you, what was your net worth, right? The math that you would do in your head is, well, everything that I own
Yeah.
minus everything that I owe equals my net worth.
Right.
So that is the formula for net worth. Well, that's the exact same formula that goes into a balance sheet, except for instead of liabilities being a negative, it's a positive and just on the other side of the equal sign. So it's assets equals liabilities plus shareholders' equity. Now, this is an incredibly important statement because it tells you how much cash a company has, what are the
Mhm.
assets that the company has, and that could be receivables, it could be buildings, it could be
Right.
patents, it could be manufacturing facilities, and more. And then on the other side is the company's liabilities. So that's unpaid bills to suppliers, perhaps money owed to employees. It could be money owed to the government, money owed to banks. You
Vendors.
definitely want to know what the liabilities the company has on its books before you make an investment. It's also important to study the company's receivables, right? Because receivables does not equal cash until the receivables are collected. And
Right.
depending on who owes you money, you may or may not ever get that money. So the quality of the receivables that a company has, especially in law firms, which can often have receivables that last for months, depending on the nature of the business, that's an important thing to study. And then finally, you want to make sure that assets minus liabilities is a positive number, that the business has actually generated profits since it was founded. So studying the balance sheet is incredibly important because it's one thing to buy a company that has lots of cash and no debt versus a company that has lots of receivables and tons of liabilities. Those are just entirely different businesses.
Yeah, like there may be, I talked about law firms. There may be some law firms who are just they're stacked to the gills with debt and loans and everything else, but they can say, I'm an 8-figure law firm, but it doesn't mean you're making money.
Right. Exactly. And with law firms in particular, because of the nature of receivables, the law firms often have big expenses when they take on a new case right out of the gate
Mhm.
to get that case to trial. And then even if they win, there's often a lengthy collection period that they have to go through. So law firms in particular often have money flowing out of the business when they take on new business, and they won't collect on that money until 6 months later, 9 months later, 12 months later. So that gap between expenses and pulling in revenue can often put huge financial pressure on the law firm, and they have to take out debt to meet that, or they have to hope that they have revenue coming in from other cases to kind of cover their costs. This is something in the business world that's called the cash conversion cycle, and it's really important for people that are in the legal businesses or interested in acquiring legal businesses to study. Because if a law firm grows too fast, if they take on too many cases, and that results in too much money going out today, that can financially break some companies. So to your point, just because a company is growing fast or has a huge caseload doesn't mean it's actually producing profits for the owners of the business.
That's actually more dangerous if you're growing that fast.
Yes. Yes. There are absolutely cases when companies have gone bankrupt because they've grown too fast, which is an ironic reason to die. But given the nature of the cash conversion cycle of law firms, it's something you have to keep a close watch on.
Yeah, because people always say, like, if you're not growing, you're dying. And so some people put that in their head to say, well, I need to open up a location every year, go into another market every year. But like you talked about the cash conversion cycle, they may be giving all their gas and not filling up in time.
Yep. You got to make sure that you grow intelligently. There's a certain rate that the business can grow at, and your abilities to support that growth depends on the cash flow dynamics of the business. So you want to be able to grow at a consistent measured rate, not at a breakneck rate, because the latter can actually kill your business.
There are a lot of folks where they feel they need to go where their competitors are, right? And they said, oh, that person opened up in that market, I need to go in that market. But you posted something the other day. I want to read it to you. You said, don't compare yourself to ridiculously successful people. Compare yourself to who you used to be. Tell me about that, man.
Yeah, well, this is something that I try and remind myself of. It's so easy to look at people that are ahead of you, or so easy to look at people that are millionaires or billionaires or living some fancy lifestyle. And humans are naturally comparative creatures. We look at them and say, I want that. And that is so far different than what I have. But that is a silly comparison to make. I will never have as much money as Elon Musk does, but that is a ridiculous thing to compare myself to. Nobody has as much money as Elon Musk does, so it's ridiculous for me to compare myself to him. What really matters is, am I making progress against who I was last year, 2 years ago, 5 years ago? And the answer there is unequivocally yes. My life today is better than it was 1 year ago, 3 years ago, 5 years ago. And isn't that a much better thing to worry about and compare yourself to than people that are ridiculously successful?
So now that is true. Now people would hear, okay, Apple's $1 trillion company, but it doesn't mean that Apple has $1 trillion in the bank.
Yeah, absolutely. There's a huge difference between the value of a company and the cash that a company has. I mean, just a few days ago, Nvidia's stock fell, and the market value of Nvidia fell by $600 billion.
Wow.
From the DeepSeek thing that came out. And most people would look at that and say, oh my God, the biggest one-day market value wipeout in stock market history. But if you look at it from NVIDIA's perspective, well, 3 years ago, NVIDIA's entire business was worth less than $500 billion. Today, it's worth over $3 trillion. $3 trillion. So they've added multiple trillions of dollars to the company's value in just the last few years. So there is an enormous difference between the market value of an asset and the amount of money that company has in a bank. Absolutely.
You brought up NVIDIA, and I remember seeing something on NVIDIA's CEO. They talked about this like a very small like AI computer that they created. And now all you hear about is like AI. And now even, Brian, you think about it. I can't remember the last time I had $100 bill in my pocket. Plus, I'm married. If I had $100 bill, my wife's going to take it. But I mean, I can't remember the last time I had cash in my pocket. It seems like everything is, you swipe your card, or now people are talking more about, Bitcoin, Ethereum, all this other stuff. I mean, how much is the digital currency, in your opinion, you feel it's going to change within the next 5 years, change our entire financial structure?
Well, I've been watching Bitcoin and cryptocurrencies from afar since its infancy, and I've been hearing that Bitcoin is going to revolutionize money and money payments since it was founded in 2008, 2009, something along there. I don't know a single person that pays for everyday expenses by using cryptocurrencies or using Bitcoin. I've been using a credit card and Visa and MasterCard this entire time, and I don't see that changing anytime soon. However, there is a legitimate case to be made that in the long term, like 5, 10, 20 years from now, that Bitcoin and cryptocurrencies could start to make inroads in the payment infrastructure that we live in. But I don't see that in my everyday life. And once I do, then I'll change my tune.
What are some mistakes, investment mistakes you think people should avoid? Not just like the items, but what are some things that they should avoid doing before they make any investments?
Yeah. So one thing that is so fascinating about investing is that if you are listening to this, you were born to be a terrible investor. There are so many things that are innately built into humans that naturally make us terrible at investing. Humans naturally take their cues from those they see around us. What that means is that we get excited about investing at the worst possible time. After markets have gone up, after we've seen all these people making money, that's when people want to jump in to investing in the first place. After markets are up a whole bunch because they see everybody else getting the rich, which is precisely the worst time to start investing because markets are already up. The valuations are already peaked, but that's naturally what we want to do. Conversely, we naturally want to get out of markets, pull our money out of markets after they've fallen because we see people around us that have lost money, that are scared. We see red dripping out of our portfolio statements. It's natural that in a painful environment, emotionally painful environment, we want to get out of markets, which is precisely the wrong thing to do. So if it feels like investing is hard, that's because it is. So many things about our human nature that make us human also make us bad investors. So the first thing to do with investing, if you want to invest well, is study and learn about all the ways, all the psychological biases that cause us to think and make bad decisions. I've made a bazillion of them. I have bought lots of investments. I've made so many investing mistakes over my career. So I'm not like preaching at people from a high hill. Nope. Yeah. I was born a horrible investor and I made all these terrible mistakes myself. But through experience and through studying great investors and learning about all the biases that exist in me that make me want to do dumb things with my money, I've slowly learned how to do them less.
But you talked about the human side of us, right? But what about the non-human side of us, like AI? How is that going to change the markets and investing? How is that going to change things?
Well, the answer is the jury is still out on that one. It's not easy to predict how AI will change investing. But what is investing? Investing is the idea of putting money out today in a business or an asset with the hope of that asset producing value and returning that value back to the investor over time. AI, I think, could help to automate some of that process, perhaps set up systems that minimize the damage that the investor, can do to that. It can certainly help with the analysis of companies, but AI can't speed up time. It can't really speed up value creation. So AI might assist with investing, might make that process easier, but building wealth is a slow process, right? And it's something that just takes time. So I don't think AI will really help to generate more money for the investor, but perhaps it can make analysis and investing easier.
What are some misconceptions that you feel about the stock market? What are some misconceptions you run across when it comes to the stock market?
Oh, there's so many pithy sayings about the stock market that I've just proven to be just wrong over time. Like even like buy low, sell high. A seemingly innocuous statement that just makes a lot of sense. Like, right? Yeah, I just got to buy something low and then I sell that thing high. Well, what's missing in there is what is the reason it was low and what is the reason it was high. As I just said a moment ago, humans naturally want to do the opposite. We naturally want to buy high and we naturally want to sell low. Moreover, if you study the stock market, if you study what happens to markets, markets go up over long periods of time. When measured over an appropriate time period, the stock market consistently goes up. So the actual statement should be buy low, buy high, buy higher, continue to hold. That's how you build wealth. In the stock market. You do it by continually buying into the market in good times and bad, and letting your wealth compound on itself.
What are some investments that you feel, and this isn't you giving advice, but that you feel can rest a little easier with people? Like I know during like 2020, like, when I was trying to do some investing, I was like, what kind of things won't be affected by COVID, or what kind of things will, thrive during COVID? Like, you see like the cruise line industry, around that time, I mean, it just tanked, but, soon, like a year or so later, it started to rebound. What are some things that you've seen that are like, not easier to invest in, but it's easier to look at, to pay attention to?
Sure. Well, this depends more on you, the investor, than anything else. To my point before, if you are the type of investor, if you're in that 1% of investor that likes thinking about things like you just said, that likes analyzing businesses, that says, okay, cruise stocks are down right now, they're going to be back up in a few years, and you know how to analyze companies and say, are the cruise ships going to survive the next couple of years? Because that was a huge question mark in 2020 when their businesses were essentially shut down. If you want to do that level analysis, then I say go for it, right? Do that analysis the right way. But if you're the type of partner that says, I don't want to think about that, I just want to buy things, make one decision and set up an automatic plan, then you should look into things like index funds or even target date retirement funds. Really make investing as simple and as easy as it can be. And we are spoiled today, Eric, because it has never been easier for us to take small amounts of money, put them in automatically to very low cost assets, and take a handoff approach to wealth building. So that is the path that I recommend to most people, is to set it up once and never have to think about it again. Let the stock market do its thing without you having to think about, is this industry going to survive or is this industry down? Take all of that out of the equation and just buy total stock market index funds.
Now, sometimes there's too much information out there to make people really nervous. And like you said, we're bad investors by nature. We're born bad investors. I think there's too much information where, some people, it's almost like in life, they love the cheers, but they hate the booze, right? So like if the stock's going up, they're in love with it. And then it's like, oh, I got to get out of this. I got to get out of it. Not a savvy investor would say, I can't sit. I got to get out of it. And then when it goes back up again, it's like, oh, either I'm glad I stayed or man, I missed the boat by letting it go.
Yeah. So what you're referring to is the difference between signal and noise. And we live in an extremely noisy time. There's always quote unquote information coming out about companies and markets, and there's tons of data out there. Investors, if you're going to be investing in individual stocks like I do, it is your job to learn how to tune out the noise, and there's a lot of noise, and listen specifically for signals. That is not something that is easy to do. That takes time and training to know what the difference is between information that is useful and information that is useless and just noise. So if you're going to be investing in individual companies, you need to pay attention to the earnings of that company and the major news announcements from that company. And you need to tune out noise about analyst price increases or decreases, or trade tariffs or interest rates, things like that, which dominate the headlines and dominate the news waves. You need to be able to tune all that out and just focus on the asset itself.
Great insight. Brian, we're going to take our final break and we're going to come back. I want you to tell everyone how to find you, how to find that content, and also about your other partner, the other Brian in your life, and tell folks how to find you. I enjoyed this conversation, man. I think people got some value from it. We'll take a brief break and we'll be right back. All right.
Action! introduce myself. My name is Ho, H to the O-V. I used to move snowflakes by the O-Z. I guess even back then you can call me CEO of the ROC. Ho, fresh out the frying pan into the fire. I be the music biz #1 supplier. Fly it in a piece of paper bearing my name. Got the hottest chick in the game wearing my chain. That's right.
Man, Brian, man, this has been awesome, man. I definitely enjoyed our conversation, man. I thank you, man, for giving us that valuable asset that you have. That's time and knowledge and expertise too, man. I really appreciate that. But before we wrap up, man, Brian, tell these folks how they can find you, your social channels. I want them to find you and be able to learn from that educational content that you're putting out there.
Yep, you can find me on pretty much every social platform. I'm on Twitter /X. I'm on Instagram. I'm on YouTube. I'm on LinkedIn. Just the easiest thing to do is search for my name, Brian Feroldi. Type it in the search box and follow me, whatever platform you like.
I always ask our guests, the name of our podcast is Going Forward. What does going forward mean to you, Brian?
Well, I'm personally on a never-ending journey to educate myself and become the best version of myself that I can. So I wake up every morning and I try and learn something new every day. My preferred medium is podcast and YouTube. So I try and watch videos that are educational and listen to podcasts every day. So to me, going forward, is a continuous journey of leveling up my education.
Brian, thank you. An amazing guest. To our listeners out there, we thank you, Going Forward Nation, for just being awesome and making this podcast what it is and being able to bring in guests like Brian, man, to be able to share his insights as well. We would love to be able to get some positive reviews from you. Share it with a friend. Hopefully they found some value in it. And thank you most of all for giving us your most valuable asset. That's your time. Brian, hold the line for me. Going Forward Nation, this is Going Forward. Thank you.
If you enjoyed today's episode, please take a moment to rate our podcast and share it with a friend. Every share, every comment, every rating propels us forward. For more content, insights, and updates, visit ericelliott.com. Remember, your journey, your story is what keeps us going forward. Until next time.